My people, how's it going? So today I had a very interesting conversation with a young man. It's a conversation that I have all the time, actually, and that is, why do I owe taxes? And I love getting this question because it allows me to discuss how taxes are calculated. Now, typically, I don't get this question from someone who has a refund, so I don't always get a chance to have that conversation. But the answer is the same to both: a miscalculation of taxes. The reason why you have a refund is because of a miscalculation of taxes, unless, of course, you have earned income credit or child tax credit or education credit. Okay. Or if you owe taxes, again, it's because of a miscalculation. Now, what you're looking at right now is the W-4. Okay, this is a form that we're all familiar with. This is the form that you get when you get that brand new job. Okay, now most people have seen the first page, but very few venture to the last few pages. Okay, the last few pages are all the math you need to properly fill out the first page. Okay, now the way I explain this is with the utility bill. When you get your utility bill in the mail for $78.13, you typically pay $78.13. Well, why is that? That's because the light company or utility company has calculated your bill for you and sent it to you in the mail, and you pay it. I ask people, why don't you pay your tax bill the way that you pay your light bill? And the answer is always, I don't know. Well, the answer is because you don't calculate your tax bill. Personally, I do not calculate my utility bill. If I wanted to, I could, as everyone else can, and is actually, advised, right? Because how do we know our utility companies are charging us the proper amount of money if we're not calculating our utility bills ourselves? A long time ago, a meter reader would come out and read the meter and subtract the two numbers, the one number from the beginning of the month, the number at the end of the month, and give you your usage. Multiply that times your kilowatts per hour, add your service fees and taxes, and voila, there's your light bill. Taxes work the exact same way. It's calculated the exact same way. The difference, however, is that as American taxpayers, we calculate our own tax bill, and we send that bill to the IRS in the form of a tax return. Now, just like your light bill, if you get your light bill and it's too high, you'll probably contact your light company, and if nothing else, at least ask questions. All right? And the same works with the IRS. If they receive a tax bill that is too low, they're probably going to call and ask questions. Okay? So, let's take a look at this, and I'll illustrate for you why it's important to calculate your taxes. Okay, so first we're going to start off with a very simple scenario. Okay, we're going to take a single individual who makes $40,000 a year. Okay, all right, so let's take $40,000 a year. Okay, and we're going to subtract that by our standard deduction. Now, the 2019 standard deduction, I just Googled it, okay, will be the very first thing that comes up when you hit Google, and that is $12,200 for individuals. Okay, so we're going to subtract $12,200 from $40,000, and there's our taxable income. Okay, once we know our taxable income, we'll come over to the Irs Tax Brackets. Now, how did I find those? You simply Google Irs Tax Bracket Forbes 2019. Okay, you can put any year here, and it will give you the tax brackets for that year. All right, okay, so Forbes 2019 tax brackets, because we're in 2019. I'm going to scroll down, and we're going to find the individual tax brackets. All right, we're going to try to get rid of this ad as soon as we can. So we see our taxable income is between these two numbers, 9701 and 39475. We're simply going to subtract $9,700. Multiply that answer times 12%, and then add 970. That is the total amount of taxes due for 2019. Okay, now let's see what happens when we come over and we use our IRS biweekly withholding table. Okay, so as you can see, this is wage bracket percentage method tables for computing income tax withholding from gross wages. All right, this is what your employer uses to withhold taxes from your paycheck. And we're going to assume, just for simplicity's sake, that this person is being paid bi-weekly. Okay, that's every other week. All right. Now, again, this young person has on their W-4 again single and one. Okay. All right. If you fill out a W-4 properly, that's what you'll put. If you're a single person, no children, just single and one. Okay. All right. Now let's see what happens. Single and one. Let's keep that. All right. If you are making $40,000 a year, okay, you simply divide that by the number of pay periods in the year to find out what your weekly paycheck is, your gross wages. Okay, so if you get paid every other week, it's 26 pay periods. That's half of 52 weeks, right? Okay, so 1538, 46 per pay period. All right, and we see at one withholding. Come back. All right. With one withholding, that's going to put us between these two numbers here. Okay, so we're going to subtract 369.67 and multiply that answer times 12%, and that is our withholding from our federal for our federal taxes of $140.25. Okay, now let's do this. Let's take our 140.25, okay, and let's multiply that times 26 pay periods, right? We're going to assume that we're going to have the same paycheck every pay period, and we're going to have the same amount of withholding every pay period. No overtime, no commissions, no bonuses, no nothing, no raises, no nothing. Same check all year long. So same check, same withholding. All right, here we go. And you see it comes up to $3,646.50. But we only owe $3,142. Why does this happen? Well, think about it. If the utility company stops calculating your utility bill, they just stop doing it, and they say, you know what, guys, from now on, you calculate your own utility bill and you send us the bill. Can you imagine how an entire industry can pop up around people simply doing nothing but coming to your home and calculating your light bill for you and charging you for doing so? Of course, because how many people are going to calculate their light bill? How many people can calculate their light bill? No, it's easier just to pay someone else to do it, okay? They'll come to your house, they'll calculate your light bill, they may even fudge some numbers for you, and they'll send that in to the utility company. When the utility company gets the light bill, they're going to look at it. As long as it's not too low, they're going to say, okay, no problem, right? If they get a light bill from an address that's a mansion and it's only $1, they're going to have some questions, right? That's the way the IRS works, okay? So remember, over here, we've calculated using our tax brackets. You only owe $31.42 for the year. But if you put single and one, your withholding is going to be $36.46 for the year. And that's going to get you a refund of $504. Whoopee, everybody's happy, right? Well, my question to all my clients is, do you overpay your light bill? If your light bill is $78.13, do you purposely pay $100 every month, no matter what the light bill is? And then do you wait till the end of the year to call your light company and ask them for a refund check? Do you do that? If you do that, then fine, keep doing that with the IRS. But if you don't do that with the light company, then why do it with the IRS? So what I do is I teach people how to calculate their tax bill, okay? And you see, we just did it. We just calculated $31.42. Very simple, takes a couple minutes. You may need a calculator to do it, but not hard at all. Okay. I'll also show you also another method using the IRS W-4 calculator. But using the method I just showed you gets you basically to the penny of what your tax bill is for the year. Okay. All right. Now, let's look at another scenario. Okay. Let's go back to our W-4. Now, remember I showed you the last couple pages of the W-4. And this one is a very important one. Okay. Two earner, multiple jobs worksheet. Okay. What this means is that if you are married and both you and your husband work, then you have to fill out this table. If you don't, then you're not filling out your W-4 properly. If you have had more than one job throughout the year, you must also fill out this worksheet. Otherwise, you're filling out your W-4 improperly. Okay. Now I'm going to show you a different way of calculating the W-4 that I think is a lot easier than going through this worksheet. To me, this looks convoluted, you know, and I'd rather take just a few minutes with a calculator to figure it out myself. So let's go back here. We're going to go back up to the top of our W-4. Okay. And let's look at the questions first. So it says enter one for yourself. Okay, that's simple enough. Enter one if married filing jointly, and enter one there. Enter one if head of household. A lot of people will make the mistake and put a 1 there because, of course, I'm head of my household, right? But that's not correct. If you're married filing jointly, you're not head of household. All right. What's the next question? It says enter one if you're single or married filing separately and have only one job, or you're married filing jointly, have only one job, and your spouse doesn't work, or your wages from a second job or your spouse's wages are $1,500 or less. Okay. Well, if you and your spouse work, you're not going to put anything there, right? Okay. Child tax credit, credit for dependents. We're going to assume we don't have any children. Okay. So our total here is going to be what? 2. 2. All right. So let's go back up to our W-4. And we're going to say married, right? And 2. Okay. Now, wife makes $50,000 a year. Husband makes $40,000 a year. Okay? Now, what we're going to do is we're going to use our IRS wage withholding table to figure out how much taxes will be withheld from the paycheck. All right. Scroll too fast. All right, so this is for married persons. Okay, this is married persons. Okay. So we got single and we got married persons. Okay. So for married persons, we're going to come back here. I'm going to take 50,000. Okay, we're going to divide that by 26. Okay, so every 2 weeks or every other week, you'll get a check for $1923.08. All right, if you're making $50,000 a year. All right. Okay, that puts you in the 12% tax bracket. So what we're going to do is going to take that number, subtract 578.33, okay, and then we're going to multiply times 12%. All right, that gives you $161 per pay period. And again, assuming that we're going to make the same amount of money every pay period, same amount of withholding, no bonuses, no commissions, no nothing. Okay, we're going to take that number and simply multiply it times 26. That gives us our withholdings, our federal withholdings for tax purposes for the entire year for $50,000. Okay, so let's do the same thing with the husband's salary. So he makes $40,000 a year. We're going to divide that by 26. Okay, biweekly pay period, $1,538 a month. Okay, that's going to also put him in the 12% tax bracket. Okay, for withholding purposes. So we're going to subtract 578.33, gives you 960. We're going to multiply that times 12%. All right, so his withholdings is $115 every pay period. We're simply going to multiply that times 26, and that gives them a total withholding for the year of $29.95. All right, so now what we're going to do is we're going to add, because it's the end of the year now, and we're filing taxes. Okay. So on that tax return, both W-2s are going to be on that tax return and both withholdings. So we're going to add his tax withholdings to hers. right? And so together they withheld $71.91. But together they made $90,000. Okay, so let's figure out their tax on $90,000. So going back to our standard deduction, we know in 2019 for married couples the standard deduction is $24,400, right? So we're going to take the $90,000, going to subtract $24,400. That gives us a taxable income of $65,600. We're going to go back to our tax table. We're going to scroll down to married filing jointly. All right. And taxable income of $65,600 is again 12% tax bracket. No problem, right? Okay, so let's subtract our $19,400. Multiply that times 12%. And we're going to add $19.40. And look at that. We have a tax of $7,484, but they only withheld $7,191. Well, what does that mean? It means that they now owe the IRS at the end of the year $292.78. And then the question becomes, well, why do we owe taxes? We filled out the W-4 correctly. We didn't play with it. We made the same amount of money every pay period. No bonuses, no commissions. We didn't do anything weird on our tax return. What's going on? Why do we owe this money? Well, it's simply because you did not properly calculate your taxes, right? Nor did you properly use the W-4. Because remember, let me go back to this one. Remember, if you are a two-earner household, you're supposed to use this this worksheet. Okay, now let me show you how I like to calculate taxes for my clients. Okay, this is really easy. All right, so we already know that for the year, okay, at $90,000, you know you're gonna owe $74.84. You know that already. Okay. All right. So now all you have to do is simply divide that by the number of pay periods you have in a year. So if you get paid bi-weekly, it's 26. If you get paid weekly, it's 52. If you get paid every month, it's 12. If you get paid bi-monthly or semi-monthly, it's 24. So we're going to assume bi-weekly and divide by 26. Every pay period, $287.85 needs to come out of that paycheck. Now, you can divide that however you want to between husband and wife. You can do 50-50, 60-40, 70-30, whatever you feel comfortable with. I had a couple a couple years ago that decided that it made more sense to have all the withholdings come out of the husband's paycheck because he got paid once a month, and not have any taxes come out of the wife's paycheck because she got paid every week. And so having that influx of cash every week was really nice, and they can just have whatever's left over from his check at the end of the month. Do it however you want to. Okay, we're going to assume that we're going to split this 50-50. So this is the total amount that we need withheld from every paycheck. Okay, and we're just going to split that in half. All right, so 144 we'll call it. Okay, needs to come out of each paycheck, and both spouses will have to create a W-4 and give it to their employer. So we'll have 144 come out of this paycheck. All right. Now, you'll always want to say single, okay, because you don't want to say married. You want them to withhold at the single rates, okay, because that's what we're basing this on, okay. All right. Now, if you're dealing with an accountant, you don't need anything in line 5. If you're dealing with an accountant, they'll understand that you simply want 144 withheld from each paycheck. If you're dealing with a payroll clerk, or if you're dealing with a third-party payroll service like ADP or Paychecks, if your company has one of those online programs to enter in your W-4, usually they won't let you bypass leaving line 5 blank. So here's the way around that, okay? You simply take your annual salary, okay? Let's say for the husband it's $40,000, and you divide it by 4,000. Okay, you get 10. All right. Now, what is that going to do? Let me show you. When we come back to our withholding, for a single person with withholdings of 10, I'm going to scroll all the way down here. All right, here we go. If his check is anything less than $1,600, which we know it is, then there's zero tax. Okay, so let me show you the math just so you can see how this works. Okay, so take 40,000 a year divided by 26. His paycheck is $1,538, which puts him in this tax bracket, right? You're gonna take $1,538 and you're gonna subtract $1,599.5. We got a negative number times 10%. There's no such thing as negative withholdings. There'll be zero taxes coming out of that paycheck, okay? But you will have an additional $144. So on your pay stub, what you'll see is you'll see federal withholding 0 and then additional federal withholding $144. If you're dealing with an accountant, you'll simply just have federal withholding $144 and that's it, and you're done. Okay? Now, for the wife, same thing, same math applies. You take 50,000 divided by 4,000. That gives you 12.5, and you put that there, or you put 13 rather, on line 5. And the same thing. Her paycheck won't qualify for withholdings, and you'll just have that 144 come out. Okay? All right. Now, what this does for you is it makes sure that at the end of the year, you don't owe the IRS does not owe you. Now, I have met some people over the years that like giving more money to the IRS than necessary as a way to save money. And it is true that U.S. government debt is one of the safest in the world. However, there are much better ways to save money. Again, if you believe that giving money to the IRS is a way to save money, then how about giving money to your light company as well and asking for a refund then, right? But if you want to do that, all you have to do is simply say, okay, well, how much of a refund do you want? Do you want $100? Do you want $1,000? Whatever you want, right? So let's say you want $1,000 refund at the end of the year. You simply take $1,000 divided by 26, and you add 38.46 to your 144. That's it. There you go. $182.46. Have that come out of your paycheck every pay period. At the end of the year, you have $1,000 refund. That simple. Okay. I think that about covers it. I think I've illustrated how this stuff works. Again, if you use the W-4 and you fill it out, answering those questions, it's going to ensure that you pay more to the IRS than necessary. Okay? And if you are married or if you do have multiple jobs, if you're not filling out the 2-earner multiple jobs worksheet, then chances are you will owe money to the IRS. Okay? Now, I want to make sure we understand when someone we all understand what happens when you put 5 and 6 and 7 allowances on your W-4. They withhold less taxes, right? Well, this is the table that shows you exactly how the taxes are withheld and how much taxes are withheld. What I like to do is I like to talk to my clients about money management. So let's think about a time where maybe from January to June, you want a larger paycheck. Okay? Let's say you want a larger paycheck from January to June. So how about you come in here and you simply put exempt on your W-4. You can do that. Okay? No problems, no worries. Did I spell that right? No, I didn't. Exempt. Okay, yeah. You simply put exempt on your W-4. Zero taxes will be withheld from your paycheck. Okay? Now, in July, and assuming that, we owe the, $31.42 because we're a $40,000 employee, okay? So we know we're going to owe $31.42, and we know that we have 6 months in order to pay it, all right? Well, all we do now is we divide that by 13 because at this point we have 13 pay periods left in the year, right? Because we had 26 for the whole year, now we only have 13, okay? Well, that means that now we need to have $242 roughly come out of each paycheck. Well, now all we have to do is come in here and do this, right? This is for our $40,000 individual. And now they have $242 come out of each paycheck between July and December, and by the end of the year, their tax liability is covered. They don't owe anything. But between January and June, they made a whole bunch of money, and their paycheck was really fat. This is really important if you are dealing with a bonus. Let me show you how that works. So what I have here is an Excel spreadsheet that I cooked up. What you're looking at is total income for the year, okay, and this is total tax for the year. And remember, this is assuming $40,000. This is assuming that you used the W-4. This is how much tax you'll actually pay if you use the W-4 and you don't calculate your taxes yourself, okay. This is your taxable withholding from every pay period, and this is the actual check amount, okay. Now, what happens when you get that bonus? Let's say that bonus is large. Let's say you got a $4,000 bonus, okay. Well, as you see here, your federal withholding is going to go way up, right? And matter of fact, let's do this easier. Let's do 45, 38, 46. Okay. You see, your federal withholding is much larger because of this bonus. And I'll show you in a second how that works. Okay. Now, our total income is $43,000. We're going to make sure we keep that at $40,000. So let's just go in and take out a couple of these. And it's be 676.92 roughly. Oh, that's not good. How did I do that? 76.92. Okay, what was I thinking? All right. Now, as you see here, with a $76 check, there won't be any federal withholding. Okay. All right. Now, with this big bonus, like I said, you're going to have a large withholding because it's more money. But look at your taxes, though. See, you're going to have $4,000 withheld when all you owe is $31.42, and your refund is going to be what? $31.42 minus $4,017. Your refund is going to be $875. Whoopee! But all you really did was pay too much money and then get some of your own money back, right? So the game plan is to pay what you owe and not a penny more. So let's take a quick look at this. Let's say you get a check for $45, $38, $46, and let's see what the withholdings look like. And I messed up here, so let me back up a little bit. So that's weekly. We don't want weekly. We want bi-weekly. Let's scroll down. All right, there we go. Bi-weekly. All right, so again, we're going to assume bi-weekly pay period, single person. They put 1 on their W-4. And so the paycheck was $4,000 and change. Okay, so that puts us in the 24% tax bracket. Okay, 24% tax bracket versus 12. So let's do that math. Let me make sure I get my number right. 45, 38, 46. Okay, 45, 38, 46. All right. And we're going to subtract 1241. Okay, going to multiply the rest by 0.224, and that gives us $791.39 of federal withholding, as we see here. Okay, and like I said, because of this big bonus, you know, he paid in more tax than necessary. Okay, so we don't want to do that, guys. Again, pay what you owe, not a penny more. If you want to save money, put it into a brokerage account, put it into a money market account, use the money to make money, do something, but don't give it to the IRS and then ask for it back later. And on top of that, a lot of times you're paying someone to get you back your own money. That's ridiculous, you know. So this is how you calculate your taxes. This is how you fill out a W-4 properly. Now, in all these examples, I've been using, you know, $40,000 of income, right? Now, for 2019, no one really knows how much money they're going to make. right? So what you have to do is you have to estimate your income, okay? And I seriously suggest recalculating your W-4 at least 3 times a year. At least 3 times a year, okay? Here's the way this works. Between January 1st and March 31st, you simply add up all your income, okay? So if we're making 1538 per pay period, and we're doing that, twice a month roughly, right? And we're doing that for 3 months. So for January through March, we've made 9228. Okay. What we're going to do is we're going to take that number and multiply it times 4. Okay. And that gives us our total income for the year, our estimated income for the year. Okay. And then we simply go through the motions of subtracting 12,200, gives us 2472. And we go back to our tax bracket here as a single person. And we're going to subtract the 9,700, multiply times 0.2, add 970. All right, so on April 1st, okay, on April 1st, we're going to assume that we owe $27.71 for the year. All right, and now what we're going to do is we're going to subtract how much tax we've already paid, and all this information is going to be on your pay stub. Okay, so let's say so far we've paid in, let's just say $500. So we know that we owe another $22.71 for the year. All right, now we simply divide that by the number of pay periods remaining. Okay, this can easily be done on a calendar. Everyone knows their pay dates. A lot of times there are pay dates calendars that tell you exactly what day you get paid on. You can simply count them up for the rest of the year. Okay, so let's just assume, let's take a look at our calendar here. And I'm just going to assume, okay, that this person got paid on the 11th of January and they got paid on the 25th. Okay, so we're going to count the pay periods here. 1, 2, 3, 4, 5. So they've had 5 pay periods. I did 6, but they had 5 pay periods so far, right? Which means they have 21 left. So you just simply divide that by 21. There's your withholding for the rest of the year. Okay, now you're gonna do this again July 1st. Okay, now July 1st comes around, all right, and you're gonna look at your pay stub. You're gonna say, okay, how much have I made so far this year? So from January 1st to June 30th, okay, let's say you made almost $20,000, okay, and I'm just doing 1538 multiplied times 13, okay, all right, and you simply multiply that times 2, because 6 months plus 6 months equals a year, okay. All right, same thing. We're going to go through the motions. 12,200, subtract 9,700, multiply times 12%, add 970. Okay, now we're going to subtract again how much taxes we've already paid. Now we know we paid 500 between January and March, and we're going to assume that we paid, I don't know, we're just throwing a number out there. Let's say 600 between April and June. So I'm going to do 600 there and then 500. Again, this information is on your check stub. It's right there in black and white. Can't miss it. Okay, so we're going to assume that we owe $2,000.41 for the rest of the year. We're going to divide that by the number of pay periods remaining. Okay, we're going to assume this is July 1st, so there's roughly 13 pay periods remaining. That's going to give us $157.07. And again, that's what's going to go on your W-4. Okay, October 1st comes around. October 1st comes around, you look at your pay stub and you say, okay, so far I have made, let's just say $34,127 so far. It's October 1st. Okay, all right. So now you're going to take that number, you're going to multiply times 1.25. Okay, all right. That gives you your estimated salary for the rest of the year. Okay, same thing. Subtract 12,200. Subtract 9,700. Multiply times 0.12. Add 970. There you go. Taxes due $34.61. We're going to subtract what we've already paid. Again, we're just looking at our check stubs here to find out what our federal withholding is. If you've had multiple jobs, you'll want to make sure you add all of those. You'll need to also make sure you add all of your gross income from all those jobs as well, okay, to arrive to at this number. So let's just assume we've paid so far, you know, $28.90. Okay, so we have $571 left that we have to pay for the rest of the year, and we know it's October 1st. So let's take a look at our calendar here. Okay, again, we're just gonna assume that maybe we got paid on the 4th. Okay, so we have what? 1, 2, 3, 4, 5, 6 pay periods left. Almost 7. Okay, so we'll say 7. So divide that by 7. Now we have $81.58 come out of every paycheck. Okay, and that is how, like I said, you make sure that at the end of the year you only pay what it is you owe, not a penny more, not a penny less.